All right, one of my most favorite things to do is do predictions, and even better are someone else's predictions because it's not me. So I'm going to react to Redfin's 2026 predictions, what they call Welcome to the Great Housing Reset. And I'm going to not go over all of them, there's like 11 of them, but I'm going to go over a few that I think are key that are going to affect all of us in the real estate industry and look at what's likely to happen when we look forward to the future.
Doc, we better back up. We don't have enough road to get up to 88.
Roads? Where we're going, we don't need roads.
Well, they may not need roads in the future, but for the foreseeable future, we are going to need housing, and so go housing, so goes interest rates, so goes the whole market. So we're going to look at Redfin's 2026 predictions that they called Welcome to the Great Housing Reset. Again, I'm not going to cover them all, but let's look at their first big prediction. Obviously, I have a lot to say on this one. Mortgage rates will dip to low 6% range, one factor that will improve affordability. And they've kind of showed this chart here where we've seen rates over the last 5 or 6 years all the way up. Now they say 6.8. I'm going to show a chart where we were over 7.5 to 8%. But whatever, just generally, obviously, rates are going down, and the Fed is likely to continue to cut rates in 2026. So we are definitely going to get lower rates. There is a lot of disagreement on where that's going to be. So I went to ChatGPT, and you can see the prompt that I used here. But basically, I asked ChatGPT where we're likely to end up with interest rates by the end of 2026. Same thing that Redfin's looking at. And I'm not going to go over all of these. You can see right here they actually keyed on Fannie Mae, Mortgage Brokers Association, Wells Fargo, Redfin, and Realtor.com. And to make kind of a long story short here, basically they would say, ChatGPT says he's comfortable or she's comfortable saying, or whatever it is, 5.9% to 6.4% as kind of the range. And the big dogs clustered around 6.2 to 6.3%. Personally, I think that's way wrong. And we will see how this prediction goes, because here's what I think is likely to happen. So first of all, let's look where rates are at right now. Today, we're at about 6.24%. This is for highly qualified buyers. You could get lower rates than this with points and all kinds of other factors, but this is the same scale we want to step on week after week. And you can see we've actually had this nice downtrend in rates really since most of 2025. Really from the beginning of 2025, rates have been on their way down. And then one last thing, let's look at the Fed and what they're saying. They're predicting an 87% chance they're going to cut the Fed funds rate at the next meeting, which means that we'll get another cut in the Fed funds rate. Now, what does all this mean? This is why I think they have this wrong. And interest rates are going to be the big driver of the market. As I say in many videos, if rates were 1% right now, whatever inventory we have would be gone very, very quickly. Right now, we're at about 6.25. The consensus to end around 6.25 to 6%. There's no way I see that possible with unemployment getting weaker, the Fed saying they're going to continue to cut rates throughout next year. More important, and this is the big one, Jerome Powell's term is up in the summer. Trump is likely to put a president that's more likely to cut rates. They're looking at 50-year mortgages, all these things. I think rates fall lower than what people think. I've said by the third quarter of next year, we could be down towards the mid-5s. We're going to see how well this ages. If we are only at 6.25 to 6%, that means we're not going to see much change from where we're at now, and I just don't see that possible. Number two, and the prediction that they're making here is home buying affordability will improve as wages grow faster than prices, and they have a chart showing that price growth falling, right? Not depreciating market, but the percentage of price growth growing, and then wage growth increasing. Now, I would say actually the biggest factor of this is going to be rates again, because if you look, this is the chart I was showing or saying that, this is according to a Mortgage News Daily, we were right around 7.98% for like 2 seconds, right? And we're all the way down to 6.25. The way my brain thinks about that is that we actually have had affordability increase $60,000 to $70,000 for a buyer. If you were buying when rates were close to 8%, you would be paying you're qualifying now for $60,000 to $70,000 more. Said differently, the same house for $60,000 to $70,000 more cost about the same, right? Because prices or payments have came down with rates falling. And if rates continue to fall, wages go up a little, that's going to make affordability better, which I think is good because I think the real estate market's likely to have nominal appreciation, maybe 1% to 3%, which is probably going to go into one of their other predictions here. So prediction 3, home sales will rise 3%. And we're going to look at NARS here, total existing home sales right now. So you can see we peaked out about 6.5 million, 6.4 million when things were really cranking, all the way down to we've been stuck at this 4 million, kind of in obviously up and down. We just hit 3.9, now we're back up to 4.1. I think we're at the bottom of these numbers. I think from here on out, we are going to see total existing home sales climb. And why? Because there is so much pent up demand. I can tell you right now, I talk to buyers all the time who say, we're going to wait a little bit longer, our lease is up next year, and maybe by then if rates are lower, which is counterintuitive, right? Right now rates are lower and there's more options. When rates fall and then mainstream media says, now's the time to buy a house, everybody's going to run out and look to buy a house. So to me, I always say get in front of that, right? You want to buy a stock before it goes up. But we will see. I think that the existing home sales will continue to rise from here. I don't know for sure. I would be shocked if we don't get back up over 4.5, 4.6 million by the end of 2026. One other prediction here that I want to cover is, let's see, that prediction 6 here, affordability crisis will unite policymakers across party lines. President Trump may declare a national housing emergency to help more Americans afford homes, and politicians on both sides of the aisles will introduce more policies to alleviate the housing affordability crisis. This is what I'm most worried about, and this may sound counterintuitive because I make money helping clients get money to buy mortgages, right, or buy houses. If they goose the housing market and rates are falling and they offer programs and incentives to buy houses, what's going to happen? Housing prices are going to go up. And I really don't think we need them to goose the housing market in a big way. Yes, affordability needs to improve, but we need to let the market work that out. If the government starts getting involved, you can bet weird things will happen. And what that weird thing might be is housing prices appreciating faster than what they need to. And then probably the one that affects us most here in the industry, number 11, AI will become a real estate matchmaker. And these tools will allow house hunters to find homes with niche features. I'm going to end by saying this with AI. It's no different than with AI or without AI. You need to have content out there, reviews, videos, blog posts, different things so that AI, when it's going out and looking at the internet, it's pulling that information in. So if you say, who's a good mortgage person in my market to work with, your name better come up in that AI search because people are using AI search over Google search, right? They're using Gemini, Perplexity, ChatGPT, and you better be on the radar because it's going to get harder and harder to stand out. Reviews and those kinds of things are still the number one thing in my opinion, and if you ask ChatGPT, it'll tell you the same thing. So what does all this mean? Is that the market is likely to improve throughout 2026. We're going to get lower rates. We're going to get more demand. Housing demand is going to go up, right? The number of sales, median price will also go up. But again, the market's been strong. It's likely to continue to stay strong. I think 2026 is going to be a great year to be in the industry. If you ever thought, why was it tough? Was it tough to be a realtor for the last couple of years? It was definitely tough to be a loan officer. I think that's about to change. We'll see. We're going to track all this and more as more data becomes available. This is Rayce Robertson, your favorite Florida mortgage broker. Have a great day, great week, and I'm looking forward to talking to you soon.